In a surprising turn of events, global stock markets surged ahead on Friday, paralleling the strength of the dollar, as investors eagerly watched the evolving landscape at the Federal Reserve. This surge was fueled by the appointment of Stephen Miron, whose dovish stance aligns closely with President Donald Trump's views on interest rate cuts. Meanwhile, gold futures skyrocketed in response to reports of newly imposed U.S. tariffs on gold imports. Reaching unprecedented heights, market pulse, investors anticipate further rate cuts by the Fed, boosting stock prices globally. Nasdaq futures continue their upward trajectory, marking a potential third consecutive day of gains. Gold futures soar on the news of U.S. tariffs on imported gold bars. Amidst the bustling financial centers of Singapore and London, on August 8, 2025, the world witnessed a remarkable day in global markets. Shares across continents climbed, alongside the dollar, as investors clung to the belief that U.S. interest rates might still see a downward adjustment before the year's end. This optimism was further bolstered by the robust performance of gold futures, reacting to the imposition of duties on U.S. gold imports. An index tracking global stocks neared record levels, brushing aside the overnight weakness seen on Wall Street. In Europe, shares received a boost from a series of solid earnings reports and the hope that the significant U.S. tariffs imposed on Thursday might still be subject to negotiation. As the market digests the implications of these developments, one thing is clear: the future of U.S. monetary policy remains uncertain, thanks to recent changes within the Federal Reserve. President Trump's decision to nominate Stephen Miron, currently the chairman of the Council of Economic Advisers. Miron's views echo Trump's criticism of Chair Jerome Powell for his perceived tardiness in reducing interest rates. This move could potentially lock in votes for rate cuts at upcoming meetings until the end of January, according to Ray Atterall, head of FX strategy at National Australia Bank. While markets are already factoring in a strong likelihood of a rate cut, the question remains whether Miron will receive Senate ratification in time for the September meeting. Regardless, the MSCI All-Country Index. The market is also processing a Bloomberg News report suggesting that Fed Governor Christopher Waller is the leading contender to replace Powell, whose term concludes on May 15, 2026. Despite initial relief over lower-than-feared tariffs, analysts warn that the long-term effects could still prove detrimental to the economy. While the current tariffs are indeed lower than what was feared in April, they stand at their highest level in over a century. This reality could lead to short-lived relief, as evidenced by the European Union's 15% tariff, which, although lower than the 50% initially threatened by Trump, still represents a significant shock to the system. U.S. gold futures reached an all-time high after the Financial Times reported that the U.S. had levied tariffs on imports of 1 kilogram gold bars, which account for the majority of Switzerland's gold exports to the U.S. Spot gold nudged up 0.1% to $3,400 per ounce, while gold futures soared up to 2.3% to an unprecedented peak of $3,477. U.S. stock futures pointed to a modest increase at the opening bell, indicating continued confidence amidst the dovish pivot at the Federal Reserve. The yield on benchmark 10-year Treasury notes remained steady at 4.2442%, unchanged from the previous day's close, despite weak demand at a recent auction of 30-year bonds. The dollar strengthened against the yen, climbing 0.1% to 147.24. The euro, however, slipped 0.2% to $1.1648 after gaining 2.13% over the past month. The dollar index, which measures the greenback against a basket of major trading partners' currencies, rose 0.2% to 98.21. This rollercoaster of financial developments has left investors and economists alike questioning the future direction of monetary policy and its impact on global markets. One thing is certain: